good to see you, Prabhat. If you could introduce yourself and your business, that would be great.
Sure. Thank you, Cormac. Thank you for having me as part of your podcast. It's really a pleasure. My name is Prabhat, and I am a Stanford alum. I went to Stanford GSB. I did my engineering from BIT Mesra out here in India. And I run a company called Your Own Room, which is a residential prop tech rental and property management company based out of India. We essentially manage about close to 300, 400 properties. These are spread in two cities in India. Primarily, we operate in Bangalore, which is in the southern part of India, and we also manage several properties in Pune. So that's at a very broad level. We become the custodian of the property. Now, this could be individual homeowners, with what we call the retail homeowners, or it could be institutional homeowners, which means these are companies that own large inventory and they engage us. So we start working with either them directly or with their customers. And then, of course, once we manage the property, then we do everything end to end, all the way from making sure the property is ready to be rented out to promoting it on our technology platform, finding the tenant, organizing site visits, getting the agreements done, getting KYCs done, and then rental collections, renewals, service request management, and if exit happens, it's all about exit settlement and so on. So it's all about end-to-end residential rental property management for our customers.
Brilliant. No, that sounds great. Yeah. Do you find that there's many competitors doing the same to the full extent that you're doing?
What I find today is this is an extremely fragmented and not so organized market. So when I say fragmented, there are different players doing different things.
Mm,
Now, if you look at residential real estate for a minute, let's take a step back. If you see residential real estate, or if you look at real estate by and large today, is about 600, it's going to be about $650 billion market by 2025, and it's growing at about 20%.
mm,
Now, this is almost one-sixth of India's GDP. I mean, that's the scale at which we are talking. And a substantial percentage of this is essentially what I would say residential real estate. Now, in residential real estate, you can broadly put them into two categories. One are companies that are building projects,
mm,
right, which are acquiring land, they're building nice, big, massive projects, townships, and so on. And then second, it's all about managing those properties, right, which is all the way from selling these properties to, renting it out and renovating it and so on. So what you will see is that there are very large players that operate all the way from building the project and maybe even selling the project to a certain extent. They do it themselves, they work with partners. But the rest of it is fairly unorganized. And
mm,
everybody has defined their own niche, etc. So today, if you really look at it, I mean, we have competition from two sets of companies or
mm,
two sets of players. One, I would call it are companies, some of the big companies like a No Broker,
mm.
maybe a Magic Bricks. They have their own platform. They spend a lot of money
Yeah.
promoting and building their entire brand, etc. Or or there are smaller players too, from where we see competition. That is one set. And the second set is there are these brokers today that exist in the market. And of course, they only do one part of what we do. I mean, they may be only finding a tenant, which is only maybe 10% or 15% of what we do. But we see competition from them too. And what we also notice is that these are players who have been in the market for a very long time and they have a lot of hyper local knowledge. So in a way, if you look at it, the debate that goes on internally is, are they really a competition, or do we, actually see them as partners, maybe, to kind of find tenants and so on. So it's a broad, net. If you look at it, it's a very unorganized market. We feel that we've figured out a very good niche in the
Mm.
residential rental property management, and now we think that, the next big growth is going to happen, when we start to partner with some of the bigger players,
Mm.
so that we are able to secure inventory and then we manage everything downstream.
Yeah, brilliant. No, that sounds good. So before we go into the growth side of things, I think it would be beneficial to take a few steps back to the start of your own room journey.
Mhm.
If you can talk to me a bit about how you first started your own room, if it was straight into the property space from education, or if there was something in between.
Sure. So, I was working for a company called Exchanging, which is essentially a British IT services firm, which has now been acquired by Hewlett Packard, and it's part of their services business. So I was working with them, and I was heading a SBU, a strategic business unit. I was running a $30 million P&L for them.
Mm,
And in the past, I've had very similar experiences where I've worked with technology companies, mainly in IT services and also in the product side. Now, one thing which was always going on in my mind, especially from my Stanford days, was I always wanted to do something of my own. But
mm,
the question was, what and when. I think that is where I was always kind of struggling with. But
mm,
then it kept building, and finally I got to a point that I wanted to do something of my own. And then the question was very clear that two things, one, I would like to do something where there's a good technology play, which means that there's a core business, but there's an underlying technology that's building or driving efficiencies, number one.
yeah.
And second, I wanted to pick a sector which is going to be there for some time. And there's a real problem that's going on. There were two or three sectors, which really got me excited.
Mm,
One was real estate, one was education, and one was healthcare. I mean, I always kept looking at these three because I feel that there's so much to do. And then I had to zero in. In fact, in my last job, I had clients like CBRE and JLL and CNW. So
yeah.
I kind of had seen this, and I always thought that if the commercial real estate is so organized, what about residential real estate? Why is it so bad? And what are the challenges and so on? And that's how, broadly I kind of identified these things. And I said, let me take a plunge and let me start your own room. When I started your own room, and if I can just give you a sense how the journey progressed,
Mm,
the immediate problem that I could see was twofold. One was on the supply side. There are a lot of these properties, which are lying idle, empty, unleveraged. There were a lot of developers who were having difficulty selling properties. So there was a huge amount of supply which was vacant. On
mm,
the other hand, there was a lot of demand which I always saw, especially among the young folks. If you look at India, and if you look at the workforce, typically the average workforce age would be somewhere in the range of 26, 27, 28, in that range,
mm,
which technically means that the number of young people is about 80% of the workforce. That's a very, very large number for a large population base.
yeah.
And they always, if you ask them, and one of the biggest challenges they would always tell you is, they don't get good accommodations in cities. And
Okay.
Bangalore is a classic example. So, I always could know that there was a major problem in terms of people getting, and there was a huge demand. So
Mm,
the question here was, could I really take the supply and kind of whatever purpose it and channel it to the demand and maybe solve a demand supply problem?
yeah.
And that is how we started Your Own Room, with a focus on singles, with a focus on co-living format homes, and then gradually went beyond co-living to families, and then from rental management to rental and property management, and many more things, post that.
Yeah, okay, that makes sense. So it's been a gradual journey, adding in the extra parts as the market demands and as you feel like you can solve the problems along the way. As
Absolutely, absolutely, absolutely. And so till you don't get your hands dirty, till you don't get yourself in the market, it's all
Mm,
bookish knowledge, or it's all on the whiteboard, right?
yeah,
The rubber has to hit the road, right? That's when you really know what works, what does not work.
yeah, definitely. No, I see that a lot. Speaking to I speak to quite a few startup businesses and they're solving all the problems that they don't know exist in the market yet. So
Mhm.
it's my advice is always take that first step, get into the market. You might change the market. So for you, you were looking at real estate, education, and medical, but you could have gone into real estate and realized actually I'd probably do better in education, but it's only from taking that step to start and as you've gone along the way is why you've been able to solve all these extra problems as well.
Absolutely, absolutely. You're right, bang on.
Definitely. Okay, so just so the listeners have a complete lie of the land, talk to me about the team size now at your own room, and how long it's been operating.
So we started Your Own Room in 2016. So it's about 8 years.
Mm,
We have a core team of about 15 people.
mm,
And we have taken a conscious decision that we will work with a small core team, and we work with a lot of people on a contract basis. So there's another about 25 people who work with us. So
mm,
totally, between the core team and other people, we're looking at easily. maybe another, total 40 or maybe 40 to 50
Yeah.
people. That's the kind. I'm currently sitting out of our headquarters. Our headquarters is in Bangalore. In fact, there's a place in Bangalore called Koramangala. So it's a little bit on the central of the city.
Okay.
And so we do this. And then we have a remote office in Pune. We operate also in Pune. And then,
Mm,
of course, the plan is to add more cities and so on. Yes.
brilliant. Okay. Okay. And talk to me a bit about the decision of having the core team and then having the contractors as well. What's the reasoning behind that?
Yeah. So if you look at the business, right, we have two distinct lines of business. One is what we call the rental business, and one is what we call the property management business, which is touching the physical asset. Now, if you look at the rental business, we need a small team, but we need a very tight team. So most of them are part of our organization. But if you look at property management, we deal with a lot of vendors because you have to actually, go and get work done in the respective properties. It could be a maintenance, it could be a renovation, it could be a project.
Mm,
Now, we took a conscious decision that any work of that nature is something we would rather outsource because they can be seasonal, they can be spikes,
mm,
and second, we don't want to be building expertise in everything.
mm,
So that is a decision. And then if you look at it in terms of our corporate team, right? I mean, the leadership, etc. It's a small team,
mm,
right? And we've taken a conscious decision that we'll have a very very small team because remember when things go bad and COVID was a good time when we learned our lessons.
mm,
It's very painful to reduce the size of the team. So we said we will keep it small and not very big. And lastly, if you look at some of the other functions like accounting, company
mm,
secretary, and of course auditors, all these are also external. So
mm.
technically, the office accommodates what I would call it like a core team, and everybody else comes, does the work done, and then they disperse. So that's how we kind of set it up.
Brilliant. Okay. Okay, fine. And how have you found, because obviously you've been operating now for 8 years, so how have you found attracting and keeping talent from maybe when you were first starting out, the difference between the startup stage where you were building out the core team, but then also probably not able to pay them the significant amounts that they'd be making now? How has that challenge balanced?
So if you look at it, it's a small team, and one of the stuff which we do employ is using ESOPs. So ESOP is given to at least some of the core guys in the team, and some of them have fairly attractive ESOPs.
Yeah.
And second, if you look at it, we just try to keep the work more meaningful, and we want to keep people more engaged. And that is something which we have made a very conscious decision. So when you keep a small team, when you keep them more engaged and they see purpose in the work that they are doing, generally they're more motivated.
Yeah.
So we've been able to manage that. I think we had a little bit of a challenge during COVID times where a lot of them were working from home,
Mm,
especially our sales guys, and they really had difficulty connecting, aligning,
mm,
orienting themselves and so on.
yeah.
So, we've also had our own share of challenges, learning, etc. And we've kept the technology team very small. We have got a full-blown, like a small tech team that has
Mm,
built the entire platform and now manages that platform.
okay.
And we have a CTO also who works with us. So all these guys, these are small, very niche players.
Mm,
So we've kind of kept them for a fairly long time.
yeah, fine. And then they're also benefiting from the ownership feel of building this up from the start, right? So
Absolutely, absolutely. Yeah.
okay, that makes sense. So well, 8 years down the line, we're now going into a strong market, it seems, across the world for tech. So
Yeah.
talk to me a bit about your feel on the market first before we dive into your plans for the next 12 months. How are you how's the confidence in the market of tech solutions today?
Yeah. So the way I look at the market, you're right. As I said, we very clearly see there are there's a wall, and there's one side of the wall which is about building the product, which is essentially building apartments, building villas, etc., hostels, and so on. There are various formats. The second part of it is selling and managing. And
Mm,
we've taken a very conscious decision that, we want to be on the right side, which is basically on selling and managing. Now, remember, we've only been managing, we've been managing rentals, we've been managing the physical assets, and we've been doing it in two formats, co-living formats and family formats.
Mm,
Now, what we feel is that the market is huge. We want to go upstream and maybe start working with, companies, where we can partner with them so
mm,
that we are involved at a sales stage. Now, at the sales stage, if we are involved, we are able to influence decisions about getting inventory. And what we've realized is that if we have to grow and if we have to succeed, I think what we need today is more inventory. If we get more inventory, we have the rest of the organization already in place and rest of the learnings in place because
mm,
we know what it takes to get a tenant into the property. We know how to get the property ready. We know everything else.
mm.
So, from a leadership perspective, our focus is to make sure that we are able to forge those type of strategic relationships
Yeah.
and we are able to sign large inventories. So, recently we made some two announcements. So there are two developers in
Mm.
Bangalore and they have some large inventory in certain locations. One is in North Bangalore and one is on the Eastern Bangalore. So
Okay.
what we've done is we've tied up and we've got into a partnership with them where we would be their strategic partner for rental and property management. So at the time of selling, they will position their home as a financial product, as a real estate financial product, which is
Yeah.
going to give them good capital appreciation and good rental yield. And we are the answers to that, right? If we manage the property well, there's better capital appreciation happening. And if we are able to have the tenants, etc., they're able to get rental yield. And the advantage over there is that it can also service your mortgage payment or your EMIs that they call in India.
Mm.
You're able to pay them off. So I
Yeah.
think, we are positioned that way. And we signed with two developers
Yeah.
here. And we are currently in the process of signing with another company, a fairly large partnership, which could, these two partnerships which I spoke to you, they're worth about 50 million in total.
Mm.
And we are working on one more, which could be maybe about more than 100 million. We are on the verge of signing. So the idea, what I feel is that our growth is going to be one is retail growth, where we keep acquiring one, two, three, four, five, whatever, units, which we
Mm.
have been doing, and
Mm.
we keep retaining them. And second is where we start looking at making these institutional partnership to get large inventory, and that will take us to the next level.
Definitely. Okay. Yeah, perfect. So it's very much still focusing on the delivery side of just offering a great management and great service to anyone that owns the property, and using the tech to support that instead of pushing tech solutions out to more people. It's staying to the more traditional side of the business of okay, let's just scale up in the types of people that we're working with or the size of properties that we're working with. Um, and that will inherently mean that you'll probably develop more tech solutions along the way as well, right?
Absolutely. Right. So the tech solution that we have is basically for us to manage our business.
Mm,
But tomorrow, nothing stops us from offering that, white labeling it and offering it to other players too.
yeah.
So it's both, but primary focus is for us to run our business, to grow our business, and to
Mm,
ensure that all the learnings are encapsulated into the tech platform.
yeah, definitely. Okay. Okay. So 12 months down the line from today, if we're having another conversation, you want to be working in these upstream markets, big
Absolutely.
players, got a few more develop or a lot more developments along the way, I imagine.
Yes,
Um,
yes.
what do you feel like the biggest gap, the biggest bottleneck is from now to you having lots and lots of these developments that you're working on?
So I think in theory, we know what we want. We want more inventory, and we need to establish those partnerships and
Mm,
acquire more inventory. I mean, that's pretty clear in our minds.
mm,
I think the key is to translate that into actual numbers.
mm,
I think that's going to be the biggest challenge. See, many times, you come out with great ideas and great thoughts, but will it really give you actual numbers? And that's where, both me and my entire team, all of us are, engaged in that. So basically, a lot of focus is going to go on that, and that will drive growth. And
mm.
second, we are also in the process of raising investments,
Okay.
right? So that's another thing where, there's a lot of focus.
Mm.
So growth and investment, I think these are two areas, where we're putting all our effort, energy, and that's what we have to make it happen.
Brilliant. Yeah. Okay. So sharing the numbers on the back end. So then I think it will then support your marketing and sales, right? It will help you then being able to work with more of these developers.
Exactly.
So talk to me a bit about the because obviously we're a sales business. So
Okay.
talk to me a bit about the sales process at the moment for you notice that someone's going to start developing a project. How does that funnel go?
Sure. So, so what happens is at this point, if you see the primary focus, the starting point is when we get a lead.
Mm.
So we run our own marketing campaigns. We have our own team. The
Through
starting point is
ads?
once, yeah.
Sorry, just to make it a full clear picture, the lead comes in from ads or like
No,
paid
you
traffic.
know, no, so lead comes from multiple sources, right?
Mm.
No, leads can come from, can be inbound leads that comes to us directly.
Mm.
Leads can come from various platforms. So there are
Mm.
certain platforms where we buy leads from.
Mm.
So basically, and then, we're out there making a lot of outbound calls and
Yeah.
emails and other stuff. And then, of course, there's Google AdWords also that we're running. But so there are multiple sources. The first starting point is for us to get those leads, which means an owner is interested in renting out their property and they want someone to manage it. The minute that comes, then it hits our sales team
Mm.
and or the sourcing team.
Mm.
What they essentially do is they have a conversation with the owner, they explain the entire model, etc., and they send an MOU, like a 5-year MOU, which explains very clearly that listen, this is how we're going to manage it for you. We become your custodians and so on. And once we sign the MOU, then the property we make sure that the property is ready to be rented out, and we put it on our platforms. We have our own website, etc. We
Mm.
promote it on our platform, and there's a lot of hits coming to our platform saying that I'm interested in this property, or and so on. And then we also use external channels too, so that we are able to reach out to broader set of people. So both inbound, outbound. Then we look for tenants. We explain the product to them beyond whatever is there on the website, which of course is there. And then we organize site visits. Once they see the property, they like it. And that's when, we take a booking, and then we do all the necessary KYC, etc. And then we do the rental agreement. So and then we help the tenant move into the property. So this is how typically, everything flows from this perspective. Now, what we are trying to do is we are also getting into partnership with some of the bigger companies where
Mm.
we become the rental and property management partner for maybe 100 units, maybe
Mm.
200
Yeah.
units. Right. Now that will give us big numbers, but the process will remain the same.
Yeah.
Now, because once you become the partner for 200 units, the minute a unit gets sold, we come into the picture as a company, and
Yeah.
then, things flow through the same cycle.
Yeah, okay, definitely. And reaching out to these businesses to create partnerships. I imagine there's a bit more resistance. It's a bit of a longer sales cycle to deal with these larger businesses. Is that a fair assumption?
Oh, yes. I mean, because the cycle times are long because you're talking about high volumes. I think more than anything else, it's also about communicating the value proposition. And see, if you look at the value proposition is that if you just sell, a real estate product, a residential real estate product, right? You're just selling a house. You're selling it like any other product.
Mhm.
But if you package it differently and if you position it saying that you're selling a financial product, a real estate financial product, right? Which is going to give you good economic returns, which is capital appreciation, rental yields. The entire positioning changes. And that is where our effort is on. When we talk to them, we try to explain them that, there has to be a paradigm shift in the way you're selling this. And
Yeah,
when you sell it in that way, then you need someone who can translate some of these things into better economic returns, and that is where we come in. We say that, hey, listen, you sell it, introduces at that point of time. We tell them, listen, we will take good care of your property. If something is broken, we will take care of it. Renovations, we will take care of it. When tenants move out, we'll bring it back to the same condition. So what happens is your property is appreciating, and real estate as an asset appreciates at anywhere in the range of 5 to 10% of 12% in India. It's very common among at least among the cities.
yeah.
Now that's a fairly sizable. So imagine that if somebody gets a 10% capital appreciation,
Mm.
right? And then on top of it, they get a 3% rental yield.
Yeah.
You're talking about 10 plus 3, 13%, and that's a pretty decent number,
Yeah.
right? So you're creating an asset, someone is managing an asset, you're getting good returns. So, a lot of, the explanation goes on to the right set of people. And once they get it, then it's a pretty straightforward, right? So, and that's where we've had two success already. And we are currently in the process of having a few more. So maybe in the next 6 months, if we were to have this conversation, we would have another 4 to 5 solid partnerships, well established, and then translating those partnerships into numbers,
Yeah.
like revenue numbers for us.
Yeah, yeah, definitely. Okay. No, it sounds interesting, and I can see how bringing it onto the logical side of the sales process, taking people away from the emotion of yes, it's a property, but let's look at the numbers, let's look at the finances and see how much money you can get off the back of that.
Yeah.
Makes
In fact,
sense.
Cormac, one very interesting thing. There's an RBI report, which is, Reserve Bank of India report.
Okay.
It makes a very interesting observation. It makes an observation that 77% of household wealth in India is invested in real estate.
Okay. Yeah.
So just look at it. So, you're talking about a country that largely believes that if you have to create wealth, the first thing is go and, invest in real estate. So, the foundation is already set. It
Yeah.
is now about taking it from there.
Yeah.
Right. So, sometimes, you may have countries that may not believe in investing in real estate. They may think that, okay, just rent it and stay, maybe invest in something else, maybe in stock market or something. Here you have a good chunk of people who believe that wealth creation happens to this. And this is something every time I talk to an owner, this comes out very, very straightforward
Yeah.
that, that you invested. And that is why we want to make sure that we are able to partner very well and we are able to unlock more value in this entire association.
Yeah. Yeah, definitely. Okay. So why do you think that is? Why do you think there's curious on the sociology side of things? Why do you think in India there is a strong belief in the real estate market and investing in the real estate market? What do you think
So,
that comes down to?
So there are multiple reasons, but the first reason is that we are living in a very volatile world, right? And many a times, if you look at things, it's very hard to explain things because there are things which are not in your control. I
Mm,
mean, today, if you look at it, there's political changes happening, there are wars going on, there are conflicts going on, and so on. And this takes a toll on your stock market. And if you
mm,
see the stock market, it's very volatile,
yeah.
right? I mean, at the end of the day, when the event has happened, all of us can be smart and we can, give our opinion. But the reality is that we're talking about things, which can be very volatile,
Hmm.
number one. That is why people look for, more, safer, places to park their wealth. Now, real estate is considered one of the safest because never in the history has property prices really gone down in India in general.
Hmm.
Now, there can be exceptions here and there and outliers, but by and large, if you see, the worst thing that has happened is that it has remained flat.
Mm, yeah.
So, people know that, at least they're assured that the prices don't go down. Now, remember, I'm talking about cities like Bangalore, Bombay,
Hmm.
etc., which are, obviously, there's a lot of commercial activity going on. If you
Hmm.
look at the GDP of these places, there's massive.
Hmm.
Even if you go down to smaller places, you will see a very similar phenomenon that real
Mm,
estate prices have kind of always gone. And also, to a certain extent, our infrastructure has not caught up. So obviously, the concentration of residential properties are in certain areas and the
yeah.
prices are high. And then there's nothing. Then there's some, another sort of concentration. So first and foremost, the belief is very high. And
Hmm.
the alternates today, the ones I would say the most obvious alternates are things like gold.
Hmm.
There is, what do you call stock market, mutual funds, PMS, and all that stuff. Or there are fixed deposit. Now, fixed deposit is not as attractive because remember, your inflation and fixed deposit are more or less at the same level. So
Hmm.
technically, your money is flat; it's not growing,
Yeah.
right? And gold, of course, there's also a good chunk of people who also believe in investing in gold. So it's all about how do you want to create your portfolio. But a maximum is in the real estate, and that is why you will see more and more people investing in real estate. Before, people used to invest in land, then they have graduated from land to apartments and villas, and
Yeah.
now people are also open about investing in other formats. And this
Hmm.
is where, for example, I keep here, we keep talking to people and we know that there are people investing in hostels, there are people investing in smaller hotels.
Mm.
hotels, or you can call it like a service apartment. The
Yeah.
people investing in farmland. So there are different formats,
Yeah.
right? That is going to come. But at this point, the general belief is fairly, the confidence levels are very high in real estate.
Yeah. Okay. Okay. That makes sense. So I was speaking to another business owner this week, and they're on the they're in the real estate game, but they're on the tokenization of real
Mhm.
estate. Are you familiar with tokenization?
I'm familiar. I'm yet to build a strong hypothesis on that.
Yeah.
There are different ways of looking at that. One is of course tokenization, and the second one is where you could have shared real estate,
Mm.
right? So there's a difference between the two of them. Um, I mean, at this point, I certainly feel that from my conversations, people are open to shared
Yeah.
real estate, right? Where you probably invest in a company that is invested in real estate, right, or so on. Tokenizations is in an early stage,
Mm.
right? Only time will tell us, in which direction it moves, etc. But yes, I mean, keep talking, hearing about all that.
Yeah, yeah, I've been researching it in this past week just to try and see where the main use case is, and I think it is very much certain markets, and where there's maybe more complex setups between the business infrastructures of how many assets they own already and
Yeah.
wanting to sell off certain parts or raise extra funds to do something else.
Yeah, but again, see, when you're talking about something like tokenization, etc., you also have to keep in mind that maybe something like this probably might be more acceptable in a commercial setup,
Yeah.
or maybe in a warehouse. Now the question is, in a residential setup, I mean, normally the owner is one owner, right? And by and large, if you look at in India, a lot of the residential assets are not owned by institutional players; they're owned by retail players.
Okay.
Right. So they all want to own it, right? They want to have this feeling that, I'm the title owner of that particular real estate. So, so I think my belief is that, a lot of the owners may have a more traditional thinking when it comes to residential real estate.
Yeah. Yeah. Okay. Okay. And I'm curious as well. So since being in the game, I'm sure you've had other opportunities coming up of slightly adjacent fields of maybe helping developers to find property deals or help or actually developing properties yourself. Or through the business of developing properties, or maybe developing a platform that helps developers run the project of building the buildings. How have you managed to decide on which ones are worthwhile to go for? Have you gone for any adjacent lines of business, or have you managed to just stay completely on the same path with your own room?
So, if you look at it, right, I mean, if you look at the entire residential real estate, first thing is, you build, you sell, and then you manage. And we are in the managed space.
Mm,
And we want to go upstream and also do selling. So we want to do manage and sell. But
yeah.
we are very clear that we don't want to build, because remember, that requires a lot of capital. It has its own set of operational challenges too.
Mhm.
So in our mind, we are very clear that we would like to be in this particular space. So if there's anything adjacent, I would say it is sell, which is the next thing in our mind. And by the way, as I mentioned to you, right, when we started off, we started with a complete focus on rentals. And
Yeah.
then we also got into physical property management. Because
Yeah.
what we realized is that there are two sides of the coin.
Yeah.
I mean, it's like if you're running a taxi business, right? One is monetizing the taxi, and second is making sure the taxis are running fine, etc. So we felt that, there was a lot of business on table. We were leaving it, we're just giving it away to vendors. We said,
Yeah.
why not do it and get some good revenue and profit out of it. So
Yeah.
we went into that space,
Mm,
and now we also do large projects too. So
yeah.
remember, if it is beyond just renovating a property, or there's some major changes they want to do, we're happy to do that, and we do it.
Mm,
Now, I think the next thing would be sales, which is going upstream.
yeah.
I think that will help us unlock a lot of value. So that's a
Mm,
big thing in our mind. And the minute we close some investments that we are currently going after, that is something which we like to do. And second, we like to go beyond Bangalore and Pune to some other cities.
Okay.
It's a vast country. So we
Yeah.
want to pick maybe two more cities, and we have a few already kind of thought through. So the idea is to kind of, from a service perspective, expand as well as from a geography perspective, to have like a two-dimensional approach to growth.
Yeah. Okay. Okay. So it's very much you're open to going into slightly adjacent or new fields, but as long as it doesn't distract you from what you started with or what
Absolutely.
you're best
Yes.
at. Because I
Yes, yes.
I see it a lot today of businesses that are now creating some AI automation and something around, especially in the sales field, lots of people that were maybe marketing agencies now saying that they're AI agencies. So a lot of noise around AI. So um, your advice to anyone is to stick to what you're good at.
Yes, yeah. I mean, I don't want. I mean, yes. I mean, I would rather have some expertise and specialization in some areas, and I would not venture into something where I know, our chances of success is low. Because what happens is, if you get into development, particularly,
Mm,
you're competing with some of the big boys, right? And these are all, you can say, more than like 10 billion, 10, more than $10 billion companies. Now,
yeah.
there's no way on this earth that you can compete with these guys. So there's no point. It's like saying you're going to build a technology company that's going to compete with a Google or a Microsoft. So some of
Mm,
these developers are of that stature. So, so I'm very clear in my mind that, we don't want to do any development or project. However, having said that, we'd rather partner with them. And their problem, if you look at it, is sales. I mean, rental is obviously a problem for all of them. But
mm,
even sales, if you look at it, because if they don't liquidate their inventory, then they are stuck with unsold inventory. And
yeah.
just to give you a sense, today, the total unsold inventory is close to 1 million units in India. So not India, only the top seven cities,
Okay.
which is worth 100, almost 100 billion.
Okay. Yeah.
So you have two things. You have idle inventory, you have unsold inventory. Between the two, if you add, we are looking at about close to 1.5 million units,
Mm,
right? Vacant or idle and unsold, and the value is about 150 billion. So there's a lot of things which are just stuck in the inventory or in various stages of construction. So I might as well partner and see if this is a place where we are able to make a bigger difference. So that's how I would look at this entire thing.
yeah. Okay. That makes sense. That makes sense. Okay. Well, we're coming towards the end of the podcast, so I have two questions that we always like to finish on. So one is off the back of the person's last podcast. So
Yeah,
we'll always ask you to ask a question for the next guest.
yeah,
The question from our last guest was looking back on your journey from when you started your business to now, what is the biggest lesson or mistake that um, you've had along the way?
yeah. So I mean, if you ask me, the biggest learning is that, see, good business is built keeping cash flow in mind,
Mm,
right? And what sounds more sexy and cool is, just going after revenue numbers or going after transaction values and so on,
yeah.
right? But real business is built based on your cash flow.
Mm,
And uh, and this is something which I've realized throughout, that from day one your focus has to be on cash flow. So instead of going all the way from transaction to revenue to
mm,
profit to cash flow, if you change your entire approach and start looking at cash flow, profit, revenue, and transactions, I think you'll make different decisions, you'll make smarter decisions. And that has been a big learning. And I mean, we have a lot of companies, which were not able to survive the COVID phase, etc., because maybe the focus wasn't there, right? So I think it's better to have a more, I would say, tight ship, and something very, maintain a lot of operational discipline, and just keep a very close watch on some of these, I would call it, financial and operational metrics.
yeah, brilliant. No, that's great advice. Okay. And yeah, what question would you like us to ask the next guest? You don't know who it is. You don't you they're a business owner, or they're a CEO or the C-suite. So yeah, what question would you like us to ask the next guest?
No, I always feel that one of the questions which always goes on in my mind is, what are your growth levers? Now, one could be something which is very obvious, and one something which could be more than just the obvious.
Mm.
But what are your growth levers, right? And that is something, that actually decides the trajectory of the organization. So to me, I think that will be one question which I'll just be very curious to, hear from people.
Yeah, definitely. Okay, so the growth levers, so what they pull, what they turn on to boost the business up.
Absolutely. Take your revenue numbers to the next level.
Yeah, perfect. Okay, brilliant. No, that's been great, Prabhat. So yeah, thanks for that. I will and any last words, or I can end the recording here.
No, nothing from my side, Cormac. Thank you so much. I really appreciate you inviting me for the podcast and giving me a platform to talk about your own room as a company and my journey.
Def-
And yes, I mean, I would like to continue talking to you, sharing updates, etc., as we go through this journey. And I feel that next 12 months is very exciting for us. My priorities are all from, as I said, growth and investment. So certainly I'd like to keep you updated about what's happening and how it's happening.
Yeah, definitely. Yeah, we're definitely set up another podcast and see how the journey's gone.
Sure, absolutely. Thank you so much, Cormac.
Perfect. Thanks.